welcome back to your regularly scheduled programming, ladies and gentlemen. Normally 10 p.m. to 11 p.m. Eastern Standard Time. If it does not say live in the bottom hand corner of your screen, then unfortunately you are not watching the live stream. You are probably watching the recap, and you might want to click back on the main channel and go ahead and click on the current live stream, because just like any other night, we have a lot to talk about here today, including young Papa Powell that speaks tomorrow, as well as a lot of other key Fed speakers. So in terms of what is going to move the markets, tomorrow is going to be call it the holy grail of the week as far as potential market moving catalyst, baby. And I hope we get something good. Either rip the band-aid off at this point, just confirm that you're going to pull Volcker us and we're going to go into a multi-year recession, or do something else. I mean, geez. At this point, just rip the band-aid off. Just rip it. We're done. Fucking, you waxed it up good, you put it on, just rip it off. Cheese Chaser, what is going on, my friend? Ugans, Bet, what's up? Chris, Win Lambo, man. Hopefully soon. I mean, if you guys did not see the video earlier, after this live stream, you definitely want to check it out. This one, the coming June MOAS with the whole, like, fighting thumbnail. MOAS coming in June, yes, if history repeats.
Wow, guys.
Executive Order 14032. Now, what's his name? Somebody here in the live streams has been telling me to look at Executive Order 14032 for quite a while now, and when you actually dive into what that is and what has happened last time around with these executive orders, this one specifically, it's quite incredible, to say the least. Do I have the article pulled up? No, I do not think so. We'll go ahead and pull it up. Executive Order 14032 could be a big deal for AMC stock. Man, the timing is too much. So if you guys are unfamiliar what Executive Order 14032 is, it replaced Trump's Executive Order 13959 last year. Executive Order 13959 prohibited financial institutions to use Chinese securities as collateral momentarily. This propped up margin calls because of the large exposure our financial institutions have to Chinese securities. When these securities were no longer accepted as collateral on January 27, 2021, AMC stock surged. For reference, let's go look at AMC stock January 27th, 2021. What a beautiful time back then. I think we all took that for granted. But that was the peak. That was the peak of the rally. January 27th, 2021. That was when AMC went from $1.91, peaked out January 27th at $20.36 per share. And then obviously came back down to earth. Let's go ahead and look. And then it says the order was shortly moved to May 27th, 2021, where AMC stock had its second surge, reaching an all-time high of $72 per share only a few days later. And what happened on obviously the 27th? If you guys did not see the video from earlier, the stock went up 35.58% that same day. It dropped 1.5% the next day, and then it went up 22.66%, and then we had the 95.22% run. So very I mean, whatever you want to put on it, call it manipulation, call it whatever, but there's definitely a high correlation here. And then it says Biden then shortly passed Executive Order 14032, which gave institutions their collateral back for 365 days on June 2nd, 2021. So young Biden comes out June 2nd or I suppose the next day would be probably the day it got actually implemented, and we peaked out June 2nd and then fell 17.92% the next day. And then it was a lot of that back and forth action, and then that's all she wrote. So definitely a weird correlation there nonetheless. But hello, how come you aren't replying messages for Patreon? If you're in the Patreon, you're also in the Discord, and that's the best way to ask a question, is just write in the Discord chat. I personally don't get on Patreon too much, besides, you know, when I have someone send out the link, but I personally don't get on there too much. I actually don't get notifications for Patreon, like, ever. So that's probably why. I am not ignoring you, though. If you have a question, you want to ask it here, that's also probably the best way to do it. Or in the Discord's a great way as well. But Patreon, for some reason, does not send out notifications anymore. What's green, brother? Energy today. Matt, what is going on? What is going on? Vlog. Man, Vlog, we love you, Vlog. We love you, Cheese Chaser, and Chris. We love all you guys. Zip Tat, whoop, whoop. Let's go, baby. Good evening, Kane. K-Pot. Yo, what is going on? Creamy Goodness. Yes, that is you. Creamy Goodness has been telling me to look at this damn executive order, and I honestly didn't know there was such a high correlation to what has happened over the last year with AMC and these rallies and the executive order, like literally down to the days. So yeah, coming June 2nd, June 3rd, wouldn't surprise me to see some bullish activity leading up to those days, like we seen in June. The executive order, it came on May 27th, and then they took it off June 2nd, which was the peak. And AMC had been rallying before that as well. You've seen a 13.25% green day, and then a 19.96% green day, then a 19.2% green day, and then the executive order actually got implemented, and then the stock rallied 35.5%, and then the rest was history. But that's the thing with these big rallies. Like, you only need the stock. Like, all this rally really was exactly what I just said. 13%, 19%, 19%, 35%, 22%, and then a 95% day. Like, that's pretty much what it is right now. Like, let's say AMC stock before June 2nd, June 3rd goes up to like $30, $40, right? All you need is 100% day, and boom, the stock's at $80, $90 again. So along the same lines of kind of what I expect, but man, the situation is so much different in a year, like dramatically different ballpark that we are currently in. Like, if these hedge funds could have not used the Chinese collateral this whole time, you probably would have seen a lot more margin calls across the board. So I would imagine now that it's going to even play possibly a much, much bigger role this time around. Like, if you were trying to put up collateral, say with your just any stock, really, you could pretty much call anything out. Put it up as collateral a year ago, they were taking that no problem. No problem. They ain't even going to discount you. They're not even going to slash 5 or 10% off. Now, you've got destroyed, so your collateral's worth a lot less, and they're going to discount that at least 10 to 20%. So, pretty interesting. In my opinion, Ken is in bed with Ray and BlackRock. They will sell to slow the MOAS. Yeah, that's interesting. That would not surprise me. Biden bailing out hedgies. Yeah, that's honestly what it was. So possibly some fun times coming. Don't fall for a fake squeeze. Yeah, I would be very surprised if there's no market reaction after literal to the day correlation the last two times this has been implemented. retracted, back implemented again, and retracted again. You definitely seen a direct correlation to what happened with AMC and that executive order. It's kind of astonishing. Like, I don't think there's anything really that has had that level of correlation to what the stock has actually done. So that's a good point. Creamy goodness. That was definitely a good point. What do you think about Ben Bernanke's remarks? I mean, he's right. Like, the Fed should have been raising a long time ago. I think the Fed knows that. That's the main headline that I had seen. I don't know what else he said. Ben Bernanke, at the same time, he's not like the most credible source. he's not like somebody that's, I don't want to like say he's not good at what he does, but I mean, look what happened. Like, he basically lied to the market. So I don't think the markets really like hold any weight to what he says. But I mean, see stagflation ahead. Yeah, like, this is not why the markets sold off. Like, the markets don't care what Ben Bernanke has to say. Like, this guy was over here saying, oh yeah, the subprime mortgages are in bad shape, but it's not going to affect overall real estate. Like, the situation is contained, it's controlled, we're fine, people are freaking out. And in the back room, you got Lehman Brothers and Bear Stearns that are like, dude, we're about to go bankrupt. Like, this is a problem. And yeah, basically did nothing. And he was not the only one involved, obviously, but he definitely played a big role in what happened. Watch for a hard market crash by June 15th to try and bury the evidence. That would not surprise me either. But really what we seen today was China, mostly China induced. You also did have a really bad, I think it's called an Empire Survey. What is it called? Is it a survey? Yeah, New York Empire State Factory activity shows surprising weakness in May. This did not help, but I think you mix, the bad retail sales from China, our retail sales coming in the morning, and this all together, and I think that's why you did see the NASDAQ drop so much relative to the Dow. Like, in the grand scope of things, was today a bad day? Sure. I mean, the NASDAQ dropped 1.2%, but we're used to a lot more. But the Dow was still slightly green. Energy kind of carried the S&P and the Dow from going substantially red today. Like, look at oil. Look at the damn oil markets, dude. Is that the futures? It was up a lot. No, yeah, that's futures. Okay. I'm like, what? Yeah, oil was up, like, natural gas was up almost 5% today. And Brent, I believe they were up like 3.5%. The overall oil sector was up 3% too. So it was a very mixed bag today. Like, my portfolio was not down much, especially with the move in after hours. I mean, AMC lost 0.85%, and they're up 1% in after hours. So we'll see. But coming by June 3rd, say in the next week and a half, we're likely to start seeing some weird moves in AMC, probably to the upside. Let's go ahead. Fed rate monitor tool. I want to see when the next Fed meeting is. I know it's early June, but mid-June exactly. June 15th. Kind of a weird time to see the markets rally, so it wouldn't surprise me to see meme stocks go for another rally. Yeah, firmly pricing in 50 basis point rate hike. Another. Huh? Huh. That's interesting. Jeez. Oh my gosh. 0.03% of market participants expect a 75 basis point rate hike at the July meeting. Ouch. Ouch. 36.5% expect a 50 basis point rate hike by September. Then you start to get more disconnected. But geez, man. Some people are projecting 3.5 to 3.75% federal funds rate by December. The consensus is 2.75 to 3% by December 2022. That's not going to be too great. Oh my gosh. Who thinks we're already in a recession? Can we talk about recessions? Or is that frowned upon in 2022? I feel like a lot of things are frowned upon in 2022. You just can't talk about certain things. Actually, I don't know if my chat's working. Somebody say something. I don't know if my chat is working. Fucking YouTube. But yeah, for this week as well, depending what Fed Powell does say, you do have a lot of option activity as well. For May 20th, you have 11,000 calls that are in the money. That's obviously by this Friday. 228,000 calls that are out of the money. But look at the put side. You have 99,000 puts that are in the money, 68,000 puts that are out of the money. So, I mean, right there is a lot of potential buying power that could come in at any time. And I think not enough people actually talk about this, but when you're actually looking at the short interest numbers for AMC stock, the short interest is sitting at about 21.65%, but this does not take into consideration all the market maker shorts that they have to put on for all of the put option. And if you go ahead and like we said, looked at the puts that are in the money, this is, I believe, the largest expiration of puts that are in the money right now to theoretically expire in the money, if they do all expire in the money. Almost 100,000. I can't recall any time we've had that many puts in the money by expiration. So that is causing a lot of artificial shorting power because these hedge funds, they buy puts that are very close to the money. So the actual short interest, if you include the options here, I mean, you could probably add another 10 to 20% on top of that short interest that is very fluid. It's not like short positions. Like that kind of short interest from the market makers can instantly be basically covered on, right? Because stocks move around a lot, especially AMC. If you get a big up move, then they're gonna rapidly have to get rid of a lot of those shorts. Hello, taco. Oh, we love tacos, and we also love hot moms. Ain't I right? I believe it is. I hope it is. Tyler, you say hi to Ling Ling for me. Well, I tried. I mean, my ex wouldn't let me talk to her today because they were busy, apparently. Who knows what that means? Camel toe. Burrito, taco, nachos, queso. Man. Quesadillas. What up, T? What's going on, Dan Evans? How you living? Mr. Simon, how you living, bro? Yo, what's up, Tyler? He's got the 8-month badge, man. 8 months. Thank you. So, micro scale. Tomorrow, SPY drops like a rocket morning to price in. Yeah, we have like 6 Fed speakers tomorrow. Lots of Fed speakers. And it's interesting because they are on like separate, like interviewing, like broadcast. I don't know, really like news wires, news agencies, don't know really the right word for that, but it actually didn't come up in the economic data, so I don't know how many people are actually familiar with the fact that we have so many Fed speakers, and some of the headlines might actually catch the markets off guard. You have Powell, you have Bostic, you have Williams, you have Clarita. I mean, you have 6, so you have most of them that speak tomorrow, and depending on what they say, yeah, it's going to be important. I believe 2 of them speak before the markets open. Powell, I believe, is at 10 a.m., and then the other ones are closer to about 1 to 2 p.m. But Powell and the ones in the morning are definitely going to dictate kind of the market sentiment on what's going to happen. But considering today, it was looking pretty fearful at one point. Like the sell-off into close, not so good. Not so good. So we'll see. I mean, the key level to watch on the SPY is 385, but we are in this weird like purgatory moment where like, yes, we understand growth is slowing down. I think it's a fact. I think most people have accepted that at this point. We accept there will likely be a recession, but it's like we haven't got that actually reflected in the data yet. We're not in a technical recession. We'll see the June GDP numbers come out, or second quarter, I should say, GDP numbers come out. We might be in a technical recession a lot faster than people expect. That could spook the markets, probably would spook the markets a lot. But we really haven't seen a lot of these declines fundamentally go in line with a lot of these stocks. Like, I watch a lot of analyst commentary. I watch a lot of different opinions. I like to watch a lot of YouTube videos, just get different opinions. And people like to draw conclusions to say, hey, well, you know, the SPY, I expect, this is what I heard earlier from Dan Niles. He says he expects the SPY to drop in between 20 and 50% peak to trough. So a 50% decline on the S&P peak to trough would be the SPY at 239. Get the fuck out of here, dude. You're tripping. You're tripping at that point. Like, that would put the SPY, dude. You're talking like Great Depression. That's like COVID lows. And the basic premise was a lot of these stocks are overvalued that control the NASDAQ, that control the broad markets, which you got a fair case there. I mean, Apple trading at, yeah, what's it at right now? Just for shits and giggles. Let's look what it's at. Just for shits and giggles. Apple is trading at 23.72 PE ratio, but if you look at these oil companies, you look at some of the commodity companies, you look at specific companies, they're trading substantially higher than something like Apple. And obviously, I'm not the biggest fanboy of Apple, right? I don't really like the prospects of Apple at this current stage, but should a Clorox really trade at 79.62 PE ratio when Apple's trading at what it's trading at? Probably not. I think there's a case for, we've seen a lot of things priced in already, and we just need to see if it materializes, if it comes in worse, or if it's better than what we expect. Like, how the fuck is a Clorox trading at 79.62 PE and you're just fine buying that? But when it comes down to like a Fubo at a half of one price to sales basis, you're like, that's expensive. Or a SoFi, that's too expensive. Come on, dude. Like, some of these analysts just don't have their heads screwed on right, or something. Something's disconnected in their mind. You know, with a lot of these value stocks are trading substantially overvalued. Like, a lot of these value stocks should not be where they are right now. And eventually that money will turn from value and go back into sweet growth. And that's where we, being by and large, I think a lot of people invest in long duration growth will do very well. Like it will flip. Like the day that the S&P's up 5%, growth investors might be negative on the day. It will be very dramatic. But yeah. But we really haven't had any good news in like 3 months or longer. Just call it 6 months. We really haven't had any good news. So that makes it hard for markets to find a foot bounce or anything. Mullen, short interest of free float 16.24%. Current shares that are sold short of 37.03 million. Cost to borrow max, average, and minimum are pretty stable. I think if you average that out, that's about 5% across the board. Minimum, average, and max. Max cost to borrow being 5.84. Cost to borrow average being 5.64. Cost to borrow minimum being 4.72. Utilization of 75.88. Days to cover at 0.21. And I don't know what the hell happened with Mullen, man. That one blows my mind, because that stock was actually up a lot. Okay. I don't know why Ortex was saying it was down like 4.27% on the day, but no, it was up 18.28%, down 3.4% in after hours. But this thing definitely seen a good size rally. That's for sure. But dude, look at, oh my gosh, this chart is kind of like satisfying because they're all like even candles, but man, give me a break. Your thoughts on BBIG? Man, BBIG needs to do something. I got these call options that are not doing a damn thing. Nah, dude, honestly, like it wouldn't surprise me to see nothing happen with BBIG. Like it's not a high conviction trade for me. Shorts might just pay out the dividend. They've already likely made a substantial amount of money shorting in the tens. Small money can go a long way, though. I believe, what was today? Was today the record date? If today was the record date, then that trade is over. Hold on. When is the record date? I don't see it there. The damn record date, man. That's all I want to know. Okay, you're really gonna make me do this. Where is the damn record date? Oh, the date selected for the distribution of the dividend shares is May 18th. Huh? So we're past the record date? Somebody's got to confirm that, because I didn't think the record date was actually over now. But it says that it should be paid. That's weird. Them calling Hood a meme stock is an insult to injure. I feel you, man. I feel you. Bro, have that $8 thing has no offering. Give it 9 to 10 months before ultimate demise. Someone would probably buy Robinhood before they went bankrupt, though. Like, in all reality. They're trading pretty much at book value. Like, take the cash they have, take the credit they have, take their assets, and they're pretty much trading at book value. That's the consensus that I've heard about Robinhood. Oh, May 18th is the record. Okay, man, that article should have said that was the record date, not the payout date. So May 18th, record date. So that'll be what, Wednesday? If the stock does not rally on Wednesday, then I would cut, personally, I would cut losses on the trade. I will sell out my options by May 18th, no matter what happens, because the record date is the only important day. And why that is basically because if you have a short position by close of May 18th, or even possibly in after hours, or I might give it till May 19th, because you can see pretty wild moves in after hours given these kind of catalysts. But if you own stock by the end of after hours on May 18th, or short stock or whatever, you have to pay out the dividend. Like, it doesn't matter if you hold the stock, you're short on the stock when May 19th starts, when Thursday starts, you still have to pay out the dividend either way. So whatever move you're going to see is going to happen from now until the end of after hours, May 18th. After that, there's no trade left. In my view. I mean, you could stay for it's just like a 20% dividend, so it's not bad at all. Too many Mullen shares went through dark pools today. Yeah, they love Mullen in the dark pools. Did you see Bridgewater sold their Tesla and bought AMC and GME? Man, suck my mask. Did you not watch the video? Did you not like Did you not like this video either? That's a problem. But yeah, we actually made a video on it, and very, very exciting, and not really because of the dollar amount. Like, it wasn't substantial for BlackRock. It's kind of showing that, hey, maybe there is some value here. Maybe, you know, that they're buying it for some reason. Like, they're still not gonna throw around $600,000. Like, just here, I don't care, we'll just lose it. There you go. They don't operate like that. So, first time they ever bought AMC in the history of the business. So, I think it's definitely a good sign. Yo, Tyler, thanks for streaming tonight. What do you think of the AT&T chart? I got some puts today for $19 that expire this week. AT&T. What, you got it on AT&T or the damn spinoff? AT&T just had news not too long ago that they were actually raising prices for the first time in a very long time. So I would just be careful with that, because that's very, very bullish, and I think that was the day that it kind of gapped up right here. Or this might have been the day that they actually merged. One or the other. I mean, that would be its 200-day moving average at about $19.17 per share. It looks pretty bullish as of right now. If we, which is unfortunate, and I hate to say that, because you have a trade in it, but it does look pretty bullish right now, and especially what you've seen today, it definitely doesn't help anything. A lot of people were kind of flooding into these so-called safety stocks. Do not fall for that bullshit, okay? These are not safety stocks that people are buying in the Dow Jones Industrial Average. These are now stocks that are severely overvalued, like severely overvalued. So don't fall for the whole value trap thing that they try to pull on new investors. Don't fall for that. Do what you guys want, but these growth stocks, even like a Google, is trading substantially lower than most oil companies and most quote-unquote value stocks. Like, what is Google at? Last time I checked, it was like 15 or 17 PE. Might be a little bit higher now. Oh, it's still at 20. But that's still, what, 3.5 times cheaper than buying Clorox? I can't get over that. Just some things you just can't get over. And that's one of them. I thought, smack, tap, pound the like button. Yes, I agree. Do what you gotta do. Get nasty with it. I don't care what you do. But don't short it. Just don't short it. There is zero return with shorting the like button. I don't even know how many people like the video. Honestly. Sometimes I look, but most of the time I'm like, man, these haters in here, they don't like the video. But sometimes you guys do show up. Sometimes you do. I thought payout was on or about May 27th. Well, yes, payout would be probably, like you are right, probably May 27th. But the record day is the only important day, right? Like the actual payout date, like May 27th, the stock will probably be down 10 to 20%. The record day is like with any normal dividend, you have the record day, and you usually see it, and this is like an arbitrage strategy that some people do, is essentially a stock will tend to run up into its record date, because if you own the stock on the record date, by the end of the day, then you get the dividend. Well, it's the same thing for the shorts. If they have a short position, by the close of the record day, they have to pay out that dividend even if they close out their position the next day, even if they cover the next day. So if you are going to cover on your short position, you're going to do it before or during the record day. You're not going to hold that position overnight. And if they do, then they would have to pay out the dividend in the cash amount that it would be for. So that's why I just say, the trade would essentially be done at that point. Not to say, something freaky couldn't happen and the stock couldn't rally more, but you're going to see a lot more downside pressure, especially if the markets don't go through a major bounce, if, that record date comes and goes and we don't see a rally. Does that make sense? But yeah, whatever the payout date is, you'll probably be down quite substantially in the stock. Like, that's the same thing with like a dividend stock. Like if a Coca-Cola pays out a 2% dividend, well, a lot of people say they pay it out June, or the record date is June 1st, and they pay it out like June 15th. Well, say May 27th, 28th, 29th, right, the 30th, you're probably going to see about a 2 to 4% rally in the stock. And then once that record day comes and goes, you usually see the equivalent of the dividend in a drop in the stock. So that's where the whole logic comes from. But it's a little bit different for BBIG because it's like a special dividend, like the spinoff. So it's a little bit different, but it's the same thing. Like if you were a short, you would get out of your short probably like now. Or maybe even May 18th. Like that's possible. But by May 19th, it's too late. Like if you didn't get out of your short position by then, you have to pay out the dividend. So there's no reason to get out of it at that point. Might as well just ride it out. Which I expected, more of a rally in it though. Like, definitely did. Like, you didn't even see the volume come in, which is very surprising. Like, we're at very low volume right now. Even on the day that it was actually announced, like, sure, the stock went up 28%. It only had 139 million shares that traded hands. Like, the volume on this thing, 200-300 million is like higher volume. The last time this thing ran up to $12, volume some days were 315 million. Very surprising you have not seen the volume actually come in. But yes, got you, Rego 2K. Which I could be wrong in some weird world and this current market we're in. Maybe it does rally still after the record date, but you're not going to see that same level of like pressure on the shorts to cover after May 18th, coming like May 19th. But we've seen some weird shit happen. Especially in the last year. What do you think when they do the share count for GME? Is AMC going to run up with GME? Yeah, if GameStop runs, I'm 100% sure, or confident, I should say, that AMC would also run up as well. Like, they have a very strong correlation. And futures are coming down a little bit. When we started this, I believe the NASDAQ was up about 0.70%. Now it's only up 0.38%. So you're going to be in this volatile market for a long time, man. The last time that I believe the markets had a major drop and the Fed was not your friend, you got to go back to like 2000 or the 90s to see a drop like that, where the Fed was not your friend and didn't bail out the markets. Like, I think you got to go back to like the .com bust. I don't think the Fed was super accommodative during this time. But ever since then, ever since '08, I mean, the Fed always did what the markets wanted them to. Overstock didn't squeeze until 2 months after their crypto dividend was delivered. Yeah, but Overstock didn't squeeze because of the dividend. Like, it wasn't a direct cause of that. It was there's a lot of skepticism on, differing opinions on why that even happened with Overstock. A lot of people were investigated for that, and there was some form of higher end manipulation there, but it's still somewhat uncertain, why that happened, and just overall, like, it wasn't necessarily because of the dividend. But that is a good point. I mean, stocks don't need like a dividend catalyst to squeeze, but it's definitely a larger than not driving factor to potentially covering on a short position. The last thing you want to do is pay out 20%. Just boom. PBR, Pabst Blue Ribbon. I like some Pabst in my life. I'm just playing, bro. No, I didn't see that. What is PBR? I've heard the ticker a lot. Elbow repair. Petrobras? Petrillo? No, I didn't see that. But it definitely did well. This is oil, ain't it? Do you think AMC will go back to $30 anytime soon? Probably sooner than not. If you have not seen the video that was put out earlier, from me, yours truly, obviously, it says MOAS coming in June. Yes, if history repeats. Executive Order 14032. This executive order it gives off different vibes from things we've seen before in the past, like down to the exact day that these are implemented and then took away. That's when you've seen the highs and subsequent falls of AMC back in January and in June. It was all around this executive order, like to the day, where you've seen the tops and subsequent falls. So I think that could potentially be, at the very least, another hype catalyst. At the very best, new all-time highs. I mean, that's what we've seen the last two times. Right here was the all-time high at the time when the executive order was actually implemented, May 27th, and then last time was what was it, the 28th, 27th, this day, yeah, 27th again. Yeah, so, and then 3 days later we did hit that 72.62 level. So I don't know. It's pretty interesting. I do think, though, that it will have some level of effect, but probably a bigger effect, honestly, now, just given where liquidity conditions are at the current moment. Like, it's not pretty out there. It's not pretty in the bond market. It's not pretty in the stock market. It's not pretty in private equity. The only thing that's really popping these days is art. So all you painters out there, all you guys that do that art, man, get good at that, because we just had a record painting that sold for like 200 million or some crazy man. They're crazy. Look at this. 2022. Shot Sage Blue Marilyn, a portrait of Marilyn Monroe by Andy Warhol, has sold for $195 million, becoming the most expensive painting from the 20th century sold at auction. The record-breaking sale kicked off Christie's Spring Marquee Week on May 9th, 2022. So art is popping, but nothing else is popping. Everything is dropping. So if you guys got any girlfriends, you got a wife out there that likes to paint, man, it's hard out here. Man, I say that all the time. It's hard out here for a pimp. I say that all the time. It's true. It's true. It's hard out here for a pimp. Especially if you're a stock trading pimp. Dude, it's tough. It's tough, man. Do you think Fed will bail them out? Bail them all out again this go around? Seems like they've exhausted a lot already. Rates, balance sheet. Bail out the markets or bail out like the whole call it meme stocks running. Like bail out AMC and GameStop shorts, kind of with the executive order again, or bail out the markets overall. How many days or weeks or months when squeeze will last? Well, squeezes don't typically last a long time. But I think on that note, it's pretty important to point out that if we get something like this, right? This is what I would expect to see during the squeeze, right? Like you're just going to see mediocre days, like 10% back-to-back days. You know, you might drop 5, you might go up 10, you might drop 4, you might go up 6, and kind of start to stair step your way up. But the money is in the big days, the 45% gainers, where the stock goes from 20 to, you know, closing at 30. Right? Or for an example, if we had closed at 35 right here and then had a 100% day, boom, you're back to new all-time highs. So you just got to get the price up there and then see the big days. So if you got the price theoretically, like right here, what was that? March 29th at $35. If we could have held up there and closed there, and then we seen a 100% day the next day, boom, we would have been at roughly, right, 70 some dollars. What if we seen another 100% day right after that? Boom, you're at $140, $150. 100% day after that, you're now in the 300s. So that's kind of what I would expect to happen. Maybe more or less, maybe multi 100% days. Doesn't matter whichever way you want to hash it out. But you're kind of going to see this up ramp first. I really don't think that you're going to wake up and see like a 100% day tomorrow, right? And in the grand scope of things, you want to see this slow and steady move to the upside before you get those big days, because what's the big deal if we have a 100% day right now? I mean, you're going to put the stock at like $22, $23 again. That's great, right? That's great. But it's not like seeing a 100% day when the stock is starting the day at 20 or starting the day at 30. That's where you start to get into a bad situation for the hedge funds that are short. That's where like one day could be like, damn, dude, we just got destroyed. Or it's like, that's not too bad, right? Like 100% day from here, shorts aren't going to look at that like we got a problem. They might start to think that, but on paper, it wouldn't be too bad to go back to $20 per share. Like a lot of shorts would either be break even or still profitable. But like I said, if you have a 100% day and the stock's 30, 35, 40, oh, you're in a big pickle if you're a hedge fund at that point. Nice way to not pay taxes, right? Buy paintings and don't pay taxes. No, Elon, bro. Dude, Elon's a genius. He paid, what did he pay, like $14 billion in taxes or something for 2021? Why do you think he's buying Twitter? It's not just to be the beacon of freedom of speech. I think that's a big reason. But another big reason is the huge, massive tax benefits he would get from that. Like, this dude's not going to have to pay taxes for at least a couple years if he were to do that, right? Because, debt Twitter has and the overall transactions, massive tax write-offs. Massive. But I hope the deal goes through. I do. Because I enjoy Twitter, and it's a great place. And I think it'd be even funner with Elon in charge. When you guys realize that Robinhood markets were blackmailed into stopping the buy button, you're going to get pissed. Oh, I think I know. Like, I think a lot of people know that. Like, man, Wall Street is ruthless. Wall Street, there's no other way to put it. Like, Wall Street is the most violent, non-violent place in the world. Like, people lose their ass in Wall Street. You don't think there's people blackmailing people all the time? That happens a lot. But specifically Robinhood, they're the new guys on the block. They're probably getting bullied around all the time, to be honest. Like look at how bad they had to clap back at Charlie Munger and Warren Buffett. Like, these dudes are like 97, and they're like, maybe that worked in your day, but just I don't know if you guys seen that. I'm not gonna go into it right now, but Charlie Munger and Buffett essentially said, like, they got what they deserved, gamifying investing, whatever, which I'm for anyone being able to invest. I think regular people should be able to invest in private markets as well. Unfortunately, you can't unless you are a accredited investor. So that's why the big guys make all the money, long story short. But Robinhood felt the need the next day to clap back and clap some 96, 97-year-old dudes. Like that's just picking a fight where you're not going to get into a real fight, right? Like, that's like Robinhood not wanting to pick on somebody their own size, like a bully in real life. They're not going to go pick on somebody bigger than them. They're going to pick on somebody smaller than them that they don't think will actually fight back and prove them wrong. Bailout the hedge funds, market makers, banks, basically all of them that are over leveraged to highest point ever. Well, there's been a lot of like money printing, so we are in a totally different situation now than we were in like '08. Like, theoretically, if we were to see like massive bankruptcies to the scale where the Fed would have to start bailing stuff out, like a '08 kind of situation, given the lack of real systemic risk, or like if you've tried to get a home loan, like, it's impossible. You have to prove everything. Like, your ducks have to be in a row. At least where I live in Michigan, they wouldn't even use a lease agreement during COVID. They wouldn't even use lease agreements. I'm like, dude, I got this lease agreement, this one. Can you take it off my debt to income? Can we get another property in here? What can we do? And they're like, no. They're like, we can't do anything about a lease agreement. So like, you got to qualify me as if I live in 3 other houses to get this 4th house. They're like, yeah. And that was the story across the board. Like, that goes to show you the level of non-risky things that were actually going on. Like the banks are not in a bad scenario. Like, these hedge funds, they're probably the biggest risk to the markets, to the financial system, to be honest. You get a couple Archegos, bombshells, right? Couple funds lose 20, 50, $100 billion. Yeah, you're in a pretty bad situation at that point. But by and large, we're not at that point. Now, I will say, with the leverage that we do see right now, it's still very high. Like, the leverage has nothing to do with like how risky the financial system is right now, because it's historically at like its lowest risk levels. Like, bankruptcies are at very low levels unless something changed in the next couple of months, which I don't personally think we're going to see, like massive bankruptcies. Then this all applies. But I will say, if the markets were to just stay down for like 5 or 10 years, you're going to have a lot of issues. You're looking at like a 20-30 long depression. You're going to be looking at like the Japanese stock market that hit their all-time highs in the 90s and has never once hit a new all-time high since then. And I don't think that's where we are at right now. And I seen this, heard this analogy from an analyst or a money manager or whatever. I think I shared it last night in the live stream, but I'll share it again because there's a lot of value in it. But he was essentially saying if you don't think the markets will ever hit a new all-time high again, if you think this is the end and everything's going bankrupt, then you are betting against evolution of the human race. And he said he is not willing to do that. And I'm like, damn, if you think about it like that, that's not wrong. It's not wrong. If the U.S. stock market never hit a new all-time high, evolution would pretty much stop on a technological level. Like, we would be the same essentially 20 years from now. And I don't think that will be the case. And I wouldn't be willing to make that bet over a long period of time. I do think right now is probably one of the best opportunities to build your wealth that you will probably ever see in your lifetime ever again. Kind of like what I say with AMC, like they were pushed to the brink. So now they're a much more efficient business. They had to shut down bad theaters. They had to do XYZ to make their operations more efficient, to lose less money, to make more money eventually, right? Well, AMC's now at that point where they did that in the past 2 years. So now they're more efficient. Now people are coming back and they're getting to reap the rewards. Their earnings are great. I mean, just imagine when all these blockbusters come out and they start their popcorn business and other things. It's going to be very well. Well, the economy is the exact opposite of AMC. AMC was struggling in the past 2 years. The economy was not. Now the economy's struggling probably for a year or two, but it's going to be just like AMC on the other side out. You're going to hash out all the kinks. You're going to have basically a market where it's more organic growth, and it's going to be a lot more stable unless they start giving out ninja loans like they did in 2008, or they start doing some funny shit over here or over there. You're going to have a much more stable market on the other side of this. So like when eventually the markets do, see inflation come down, the Fed's not as aggressively, dude, the markets are going to rip and they're never coming back down to these levels unless we see another COVID. So like right now is a beautiful time because you have the next year or two, in my personal opinion, to acquire massive stakes. Like this would be the time if you get paid, say, 50 grand a year, to try to put at least 10 to 15,000 a year into the markets. Because if you do that for 2 years, let's say you put 30, 50,000, call it 50,000 in a lot of these beaten down quality names. I'm talking Square, I'm talking SoFi, I'm talking DraftKings, right? These kind of companies, throw some Polestar, some Lucid in there, right? That 50K in 2 years, shit, that could be worth $1 million in 5 years from now when things do get back right, or 10 years from now, whatever the time frame is there. 50K, 30K could be worth substantially more in the next 5 years, call it that. So I think this is probably the greatest opportunity to build your long-term wealth that you'll probably ever see in your investment lifetime, because the markets will be a lot better off comparatively. Look at it like AMC, right? Much better off today than they were in the past 2 years. Now that it's the market's turn to go through that and hash out the kinks here. So that's that. I think that's a pretty good positive note to leave it off on, and I hope that gives you guys something to think about. It's what you should be thinking about if you're in this for actually, creating a lot of long-term wealth. Like AMC, that's all fine. We're not guaranteed to know exactly how high it'll go, how much money we'll make. But I know one thing's for sure. If you take advantage of what I just said, you won't even care what happens to AMC in the long term, which granted it's going to do what it's going to do. I firmly believe, or I would have sold out my stock a long time ago, that we are going to squeeze. And I've had the same theory for the last 6 months. Point is, regardless of anything else, any other trade you have, if you do that, you buy quality companies for the next 1 to 2 years and you put a little bit extra money into it, I personally believe you will be strongly rewarded on the other end of it once markets do come back, because I'm personally not willing to bet on technological evolution of the world coming to an end. I'm not willing to make that bet. So, yeah. That's pretty much it. Hit the like button, subscribe to the channel, source, comments, questions, or concerns in the last video. I do want your guys' opinion on this whole situation, Executive Order 14032. So if you guys have not seen this, then definitely go ahead and check it out and leave your thoughts down below. Anything contrary to this, great. Anything, that I missed, great. Put it in there. Let me know your thoughts. I appreciate every single one of you guys.